Hello, my friends. Mark Cunningham at Grace Management. The return of the accidental landlord. No, it's not a horror movie that's coming out, although you could look at it through that lens. The return of the accidental landlord is what I believe, in my crystal ball, that we are about to experience in the property management industry. And this is a good thing for all of us, a good thing. Now, if you've been in this business for just a decade or last, you probably don't know what I'm talking about. You don't even know what an accidental landlord. What's an accidental landlord, Mark? That's a great question, a very fair question. You see, back in the good old days of this industry, many of our owner clients would come to us. They would email us, they would call us, and they would say something like this. Hey, I've been trying to sell my home. I can't sell it for the price I need. I would prefer to sell it, but for whatever reason I can't, so I'm thinking about having you manage it. And that's probably historically where half of our clients have come from. It is, and most PM companies will tell you, yeah, over time, half of your clients come just from that. They don't consider themselves investors. They would rather sell. So the definition of an accidental landlord is someone who would prefer to sell, but for whatever reason, they can't sell. Now, maybe they can't sell because they're underwater on the home. It's not worth as much as they owe. Maybe they're going to be moving back in a year, and they just kind of, but they would prefer to sell, but they can't. Now, what's causing this? Why does Mark, in his little head, think that we're going to have this massive, and I do mean massive, shift of accidental landlords coming back? Well, a couple reasons. Number one, interest rates. As interest rates go up, home prices do slow. Now, they may still come up a little bit, but they're going to slow. We've been in 12 years, my friends. We've been in 12 years of unprecedented housing price appreciation. It has been ridiculous. This is not normal. The last 12 years it's not normal. And for those people that say, this is the new normal. Last time was different. This will never slow again. I wouldn't bet on that. I'm not betting on that. Because as interest rates are ticking up, we are seeing housing prices, or demand, I should say, start to slow. Once demand slows, what follows that? Housing prices could definitely drop a little bit. I'm not some sky is falling guy. I don't think the bottom's going to fall out of the market and we're going to collapse. But I do think it's going to slow, and we're seeing that in many parts of the country thus far. Secondly, a talk of recession. Right? This is in the headlines every day. Recession's right around the corner. All we need is another quarter, and we're going to hit a recession. What's a recession? It's 2 quarters of consecutive negative GDP growth. Does that mean anything? No, it's just a definition, but it freaks people out. And people talk about it, and the news loves to talk about it, and that slows people down. Many big companies have already announced, hey, we're going to pull back on hiring. This stuff takes just a little while to hit, but when it hits, bam, watch out. Because things slow suddenly dramatically. We're seeing it in the stock market. We're certainly seeing it with inflation and pricing that way. So as these things happen, the question comes up, well, gosh, what will happen to housing prices? Are housing prices going to flatten? Are they just going to go up at a slower pace? If inflation goes up high, maybe housing prices will go up high, right? What could happen? And anything could happen. Of course it could happen. But in a lot of markets that I'm watching, we're seeing housing prices start to actually decline. Yes, actually come down. It is not normal for housing prices to go up 20% per year for 10 years. That's not normal. And even last year, on average, what do we see? Nationwide, I think we had the highest year-over-year price appreciation this last year. Nationally, on average, it was like 21% or something. That's not real sustainable. So if housing prices just took even a 5-10% dip, what is that going to do to all the people that bought a house in the last year or two if they need to sell? If there's a death in the family, if they get transferred across the country, if they get married, if they get divorced. But for those people that need to sell, now they're stuck. They're in a bind because they paid $220 for it. Let's say they paid $300,000 for it, and it's only gone up to $305. It's gone up a little bit. They bought it 6 months ago at $3. It's gone up to $305, and then they get a job transfer. But now when they sell it, when they factor in a big fat sales commission, suddenly they're going to lose money if they sell it. And they say, I can't lose money. I think I will rent it out, and then your phone rings. Now, before I tell you how to prepare for what I believe will be a flood of incoming accidental landlords, I want to thank the sponsor for this video, Reconcile Daily. How's your accounting? How's your books? Are you starting to just sweat just hearing that? If the real estate commission comes knocking, is your trust account in place? Is it aligned? If not, you need to reach out to the folks at Reconcile Daily. You can email Marco. I know Marco. Marco's a good guy. He's a property manager and he's a CPA, and he can do your books for you. Reconcile Daily reconciles your books daily. Yes, it's a very Very interesting name there. Marco's not great on naming a business, not a lot of creativity there, but you don't want creativity in your accountant. So email Marco at Reconcile Daily. He will do a free consult for you, give you a look at your books, tell you kind of overview to determine if they can help you. The people that I've talked to that have used these guys love, love, love them. So reach out to those folks. Tell them Mark sent you. Okay, so what do we need to do? Like, how do we get ready for this? What I suggest is that a couple things. Number one, you have to know who you're designed to serve. If people start flooding into you, and I think that will happen in many, many markets, a big risk you have is taking all of them. Of course, oh, come on in, because suddenly you find yourself doing things differently for different people, and you're so excited about the phone ringing because maybe it's been hard the last year or 2 or 3 to get new clients in, that suddenly some start coming in and you feel desperate and you feel grateful and you feel a little bit scared that more aren't going to come, and so you find yourself bending your own rules and allowing people to work with you who maybe you shouldn't. So let me just share with you 3 quick filters you should put leads through when they come to you to help you determine whether or not they're a proper fit. Number one, clients who view you as the expert. If they call you and the first thing they're doing is telling you how much it will rent for, they're telling you what kind of person they want in the property, they're telling you when to be there with the information, they're telling you, they may not view you as the expert. They view you as their administrative assistant. You are a professional property manager, my friend. You are not an administrative assistant. You are the expert. Not in an arrogant way, but you know what you're doing. So you want clients that view you as the expert. Number 2, you want clients who do not have unrealistic expectations of you. If they're demanding you get this thing rented next week, if they're demanding that you do this, they want you to change your policy, they want to negotiate the management agreement, they want to approve all applicants, they want to approve pets, they want to do this. Guess what? They have unrealistic expectations of you. So make sure that they have realistic expectations of what you're able to do for them. And third, and probably most important, if we just want to sum it up and wrap it up in a nice little bow, clients who are easy to work with. Oh, isn't that a great filter? That's really only the filter you need. Don't take on clients that are not easy to work with. Why? Because it'll drive you crazy and it probably won't end well. We want clients that when the phone rings, we're excited to get it. We see their number, we think, oh, I haven't talked to them in a while. I wonder how they're doing. Not the ones that you see their name, the number come up on the phone, and you think, oh no, your stomach goes into knots. And you think, oh, please, no, I don't want to talk to them. They're not easy to work with. So don't bring them in. If you brought them in, then correct it and move them back out of the process. Hey, one last thing. Have you joined our video coaching club? Like so many other PMs have done. This month, we are talking about the 17, and yes, exactly 17, the 17 metrics that I think you need to be tracking in your PM company. I'm going to give them a doc on how to track it and track trends over that, because there's so much data information out there. What do you track? What should you pay attention to? What should you ignore? There's so much. Well, I'm going to tell you the 17 things we track every month and certainly every quarter, and how we do it from a trends document. Our PM coaching members are getting that. That's this month's coaching. If you join this month, I'll send that to you right now. Even though you started at the beginning, I'll give you that one now because I think it's that important. There's a link in there. We'd love to have you join us if that sounds something that would be interesting to you. If not, jump on our website, pmbuild.com. You'll find more information than you know what to do with there. Until 2 weeks from now, my friends, I wish you success.